All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for, it's the 4th of December. We have this one and three more total for the year, and then we're going to call it quits for a couple weeks. So a couple things to look into to our market. And I know I keep saying this over and over again. So I guess let's take a look. Let's look at the core holdings tonight. And there's a couple things I'm going to say about them, and let's touch base. Let's go Meta first. Meta just held the 50-day simple moving average. But someone that's holding Meta, does anyone know where we put our protection on for Meta? Anyone know where protection on for Meta? And we actually did it last week. Nobody? We should have our protection on Meta at 335. Kevin, what suggested that you do that? Well, it had risen up above its yearly high, and the short answer is we were running into an end of the year where a stock like Meta, who's had such a big return, usually will do some pulling back. So we put some protection on. We're still doing pretty good with our bull calls. Thank goodness we have those shorts on. But we may be in a position where if we get a bounce, we're going to take those shorts off and get out of Meta between 340 and 350 on the bull call. So that's when we prepared ahead of time to protect. If we go through Apple, Apple got protection on today. 190. Good day to have protection on. As we take a look at Apple, all our protection is an overbought long put. I hope Apple doesn't break below 187.50. We've been trying to add protection on. We've been trying to add protection on for Apple just because of the rate hike coming up, and Apple doesn't do good through rate hikes or non-rate hikes, for an honest answer. But looking at Apple, we decided let's get some protection on. I wonder if it's going to look better through this. Boeing. No, I'm sorry. Let's do Baidu. Baidu's better. Baidu, great earnings. Had a good run up. We've got protection on Baidu either at 120 or at 118. We just hit the top end of that reference line. We were smart to get it on. It feels like it's going to hold. And again, obviously we don't know for sure, but we feel like it's going to hold. But it didn't. Never mind. Everything I was going to tell you didn't make sense. So we're just going to keep quiet on one. Bank of America, we've got out of the money $29 protection on Bank of America. It's actually up higher. So we're running out of the money protection on Bank of America literally just to get through the rate hike meeting. That is all we're doing. Disney, we were smart on Disney. We put out of the protection money on Disney, and we're profitable at $90. We're also would possibly add more protection if Disney heads lower. Now, something that I found very interesting, and I'm going to suggest, it feels like I say this all the time, you have to do your own due diligence. And I'm going to first come up with Disney. So a couple articles have come out, and in case you didn't know, Disney owns its own county, which means people within the county pay taxes, but Disney provides waste management. Can't see what I'm typing here. Waste management services, police services, some electric, but what are the main ones? Waste management. Dang it, give me a quick second. I had them listed and now I don't, which is not helpful. RCID is what it's called. I can't find it. Of course I can't find it. Fire departments. And I'm just going to put etc. because I can't find where I had all this. So there's an article that came out. I believe it came out by the Federalist, and it came out today by Kyle Griswold. And I will Federalist, Kyle Griswold, and it came out December 4th, 2023. About, how could I say, about the Disney RICD scam. And the RICD or RCID, which one is it? RCID stands for the Reedy Creek Improvement District. It's its own county. And the short answer is it basically says all these people have higher taxes that were in this this group. And I found it interesting because, you know, it basically says, hey, since June, this hasn't worked. But 6 days ago, guess what the state Senate for Florida suggested? And it's back on the ticket to be voted on. Guess what the state Senate suggested? Take a wild guess. Come on, someone take a guess. Anyone? The state Senate put back on their books. The lawmakers are proposing a bill to put to restore Disney's Reedy Creek district. So the lawmakers are looking to put it back on the books. And it's the state Senate that wants to do it for two reasons. Anyone know the two reasons? Cheaper taxes and infrastructure costs, because now they have to come up with all of this. And that also means that the people that have these high taxes and higher property values close to Epcot and so forth are going to pay for it. Anyone know the second one? Someone take a guess. Energy would be a good one. I don't think it's energy, and everything I've read, energy, they don't pay for their own energy. The state provides it and they pay the bills for it. Own control, that's another good one, but no, it's back on and they're voting on it, and this one came out on November 28th by Ashley Carter. It really comes down to lawsuits. And the biggest lawsuit right now, other than Disney, has been, where is it? Biggest lawsuit. Is another theme park, Universal Studios. And there's about somewhere between 33 and 34 lawsuits that are now coming against the state because they are reneging on a single one of these improvement districts, I think are what they're called, right? These improvement districts, because there are like 2,000 out there. But Universal Studios is suing the state for on behalf of themselves and Disney. And if it doesn't get restructured, the Universal Studios lawsuit will bankrupt the state. If you were to ask me, the winner is only DeSantis. I mean, that is the only winner in the lawsuit right now, because he looked tough. And let's face it, he hasn't done anything. For the state of Florida, he truly hasn't done anything. He's just taken what Bush put into place and he hasn't screwed it up, which I guess is saying that you've done something. But with all this said, it's really going to hurt the state of Florida, and it's hurting those people that are there already. What a mess. What a lawsuit mess that things are happening here. And the rough side about this, if you're pro-Republican, it's really the Democrats that are really pushing this. It's the state Senate leader of Linda Stewart. who's going to reintroduce a bill to restore the district as it was before the state takeover. And all it's done is cost the state of Florida millions and millions and millions of dollars. I'm going to make one other comment. You don't have to like the company to make money on it. And something I learned a long time ago, I sometimes hate the company. And this is where you can't, sometimes it's called being married to the stock, right? You can't be married to the stock. You can't personally have feelings like, oh, it's Disney. I grew up on Disney. I'm never going to sell it. I'm never going to buy it. That's not analytically looking at a company the way you need to look at it if you're interested in making money on it. And I had a really interesting conversation. Can someone please tell me, and it's not Anheuser-Busch, what is the most woke company out there? It's also the richest. Anyone know? Has been for decades. See it in their content, you see it in their voting, you see it in the state that they reside in. Apple. You are correct. Has been for years. But it's funny how people don't talk about it. I can't own Anheuser-Busch. I can't own Disney anymore. But they'll own Apple in a heartbeat. Anyone know what the difference is between the two? Someone just typed in, Apple is a cult. That's why. Anyone have an idea what the difference is? There you go. Yeah, Maud hit it on the head. They keep quiet. They're truly not pushing it down people's throats. They're producing it and letting the people decide if they're going to watch it or not. I personally don't have, well, I guess I do, but I get it for free. I'm not a big watcher of Apple TV. I'll be honest, I do have Disney Plus, but I do that more for the Star Wars or the old movies on Disney, and I do it to watch ESPN. It's different. After Wozniak was out, Apple was a very different company till today. Yeah, it was. And the key, you don't have to like the company to make money on it. You just have to have, it just has to be fundamentally sound with the opportunity mathematically to be profitable, really. In fact, with that said, though, we made more money on Bear Stearns on the way down than obviously the company ever made on the way up. So that's just something to understand. Rust. Trust the system. Can't type today. And if all hell breaks loose, 2008, we know how to have a profitable year. We just double up on puts. And the funny thing is, 2010 was even better. That was the first time that I was looking at 100% returns on portfolios of 6 figures or more, because we had all these shares that we picked up on the way down. We made more money on the way down in 2008, where we had a really down year. In fact, 2020 was another one. Heads up to all of you. Election years, 8.5% yearly return. Bonds, 7.5% yearly returns. An election year is a really good year where fundamentals go out the door as as politicians don't want to tick you off. Just something interesting that I thought you guys should be made aware of. Are there any questions about what I'm writing in here? And Bill, I know you probably want to say something. Stuart, how about you? And I actually don't know if it was Dave or David W, but one of you made a comment about this in general or sent me the information on Disney. Did I get your questions asked and did I answer it satisfactorily? Okay, so really quickly, no, I'm not trying to find stocks that go down, but we do want stocks that have movements in it, especially over periods of time, years down, years up, losing 50%. Those are ideal for collar trading. Yes, Facebook was one that we did for those that could afford 300 shares of Facebook, which is a pretty hefty buy. But that doesn't mean that we can't have that in Under Armour right now, that we can't have that in Disney right now. Baidu definitely has triple the return in it. Boeing has a double. There are a lot of our stocks. Bank of America has a double. There's a lot of stocks that we're in that has that opportunity. Expect bullish until mid-January? Yes. In fact, we're going to expect bullishness and we'll protect ourselves. Well, so it depends, Stuart. We've got a rate hike on a meeting on December 13th. And truly, the only thing that will help us go up is if they say they're done cutting rates. If they don't say that, the gains we saw in November will probably evaporate and we'll have like an 8% up year in the stock market. Hence, we've been protecting, and we might double up from the middle of December till earnings in January. So our expectation is we were bullish through, the first week of November, and that's where Hurley Investments kind of caught on. But I'm trying to start to protect now for a December 13th rate hike, which will tank. No rate hike, which will tank unless they say they're done. If they don't say they're done, then the expectation is there is a rate hike in January if they don't give one. And if they don't say they're done and they give a rate hike, then there's a chance there might be 2 rate hikes still in there because of their poor job of communicating. They're uncertain and don't know, and the stock market has picked up on that. My bet is that they've overshot. They've overshot, but I truly thought the last rate hike would have been best for the stock market in November. Unfortunately, there's talk all over the place that, hey, they're done raising rates, and nothing could be farther from the truth. There are no there's nothing that justifies that idea of thinking. So David W, that's my answer, and Stuart, hopefully I got those answered in there. Does anybody else have a question on anything that we're trading that I might not have been over? Pretty interesting. We have Under Armour running. We have Facebook, who stopped and bounced above their 50-day, went below it, was down $9 and finished down only 580 something, but $1 above their 50-day. So we have a bounce coming up right there. Any other thoughts or questions you guys have that I can answer? All right, let me see. I'm going to kind of make through, we're going through things. If something comes in, we'll stop and we'll get that answered. The briefing has not come up with a new commentary. So I don't know. Nothing new there. I'm just keeping it there for you guys in case you missed the past one. I did not put the charts in there, so I probably should. Let me get those in here, but the short answer is industrial average. The Dow Jones Industrial Average, for all intents and purposes, is definitely overbought. It's overbought, and it is more than ready for a pullback, which just might be that comment that that plain and simple, those 30 or 31 stocks are ready to be pulled back. Where the heck is my chart? Come on. Want my chart cutter. Thank you. So let me get a screenshot that I can put in there when I'm done tonight. And it'll tell me to check to see that I like it. There we go. That's good. If we look at the S&P 500, a little bit different story. It is coming off of overbought, but notice how it's building a base. S&P can go higher. It just is going to have to get through this overbought position that it's at. And then the NASDAQ also has a different story. And I will put these in later. NASDAQ composite. It is more so coming off of overbought. Nor did it stay overbought as long as the S&P 500, but it also is building a base. Taking a minute. It is also building a base on last month's resistance level line. So again, looking at these two, I love the base that the NASDAQ is moving on to bounce higher. I love the S&P 500 building a base. And I don't see it for the NASDAQ. I would probably expect the NASDAQ to fall back down in the near future. All right, World S&P in December, I'm still going to say 2.5%. Earnings is kind of shallow. And some of you are going to say, well, Kevin, didn't you mention some of these before? Yeah, it seems like I might have been off a week. I get my earnings calendar from briefings.com. And this is where I'm taking a peek. I might have read them last week, what was coming up. AutoZone on Tuesday. Dave and Buster's I pay attention to. Toll Brothers for homeowners, home builders. Wednesday, Campbell Soup I pay attention to. I like the Corn Ferry tour. I pay attention to that just because I want to. Chewy, GameStop. Some of those are interesting. Thursday, Dollar General, DocuSign, Cooper because Cooper does my mortgage, Broadcom, Lululemon, and then Friday, I don't even know who Hello Group is. And by the way, I will pay attention to Smith & Wesson, Brand Corps, and Vail. Thursday, there's a lot that's really in there. All right. Average work week at the end of the week will be rather important. ADP employment number on Wednesday, not so much. Factory orders today was much worse than expected. Supposed to be down negative 2.6, came in negative 3.6. 100 full basis points below, so that was not good. A very interesting article. Regional banks at greatest risk of being taken over by rivals. I saw this one because Zions Bank is in here. Zions is a big one that needs the help. So be curious to see if Zions gets purchased here in the near future. All right. Tech to rally in 2024 as AI leads biggest transformation since the birth of the internet. That was from Wedbush. Someone just asked me, hey, I'm starting my own RIA, rotating some money over, not a whole lot. He asked me on Sunday, what do I think? And I said pretty easily, big tech seems to still be where it's at. Google, Apple, I really like Facebook still. And if you look at some of the big tech, Meta, Google, Apple, Microsoft, Amazon, I'm not in favor of. Neither is Microsoft. Microsoft has done better than Apple or Google this year. Palo Alto Networks, Google L, a couple of these I'm not too familiar with. PLTR, ZS, MDB, NDX, DDOG. The short answer is this is probably where we're going to see our run into next year. Kevin, why? Well, for the most part, politicians don't want to screw up an election year and piss people off. So you're going to see some of those comments that you've heard in the past about, oh, I don't know, about the garbage that some of these big tech companies have done. You just aren't going to see those comments till after the election. It's an after the election gripe session for whichever party lost. Doesn't matter if it's Democrat or Republican, they both seem to bitch and moan and gripe about the same things if their party person lost. So probably next year, tech is going to continue to rally. For us, we like Micron. Datadog is one I'm looking at, DDOG, but that might be a new purchase into next year. Anyone else know what else usually rallies in an election year? Maybe have that on hold. Here's the GM, just to help you guys understand. General Motors did not initiate a $10 billion buyback. It reinstated its buyback and put more money to it. So again, it did not initiate a $10 billion share repurchase program. It already had 5 or 6 billion on its books to be purchased, but it suspended the buyback for a while. It just reset it at 10. So again, we are seeing a boost in General Motors. And somebody asked me this question, should we really jump into General Motors? It just initiated a $10 billion buyback. And my comment was probably not. You just have a buyback because they're going to go in there. They went into cheap money previously and it's on hold. They actually stopped the buyback and the dividend. And they're also losing more money than, let's say, Ford in their electric car program. The only reason why I'd be buying General Motors is for the buyback. Their earnings sucked. Their company sucks. Stock was down 14.1% so far this year. If I take a quick look at Ford, I thought Ford was actually up for the year. Boy, we got out and sold Ford at like $15 with those puts. Year to date on Ford. Yeah, Ford's beaten by a little bit. Ford's only down 8%. But the good news is we got called away on Ford up there at $15. So not bad, not bad. And yes, I do think Ford has a buyback, but I also thought it was suspended. We haven't been in Ford in about 4 months, so I'm not up to date on Ford. But just things you've got to be paying attention to. You don't just read and buy the hype. Do your own research so you know what's really being said. All right, with that said, any questions you guys have that I can answer for you? We do have a recap coming out, I believe, tomorrow. So I will have a recap. I might apologize to you guys this year. Last year and this year, well, in the past, I've done some gifts, made sure gifts and cards have come out to you guys. I'm a little on the learning to take care of a grown adult full time. And I might apologize if this year also I'm not into getting some things out. Really, Jared is taking a ton of my time right now. And I'll be back into it next year and I'll make sure it's really, really good. But I've really enjoyed spoiling you guys at the end of the year, getting some silver out, getting some baskets out to you guys. I do apologize if some of you are going, what is going on with you? It's just world got turned upside down a year and a half ago, and we're just still trying to figure things out. So thank you. All right, if there are no questions coming up, will we call tonight? Going once, going twice. Thank you, everyone. Greatly appreciate it. All right, hey, look forward to seeing you guys next Monday, and then one more time after that. Please enjoy your holiday season, and we'll get this posted up here first thing tomorrow. And there's a recap email coming out to you guys as well. You guys have a good evening. I will see you next week. Bye-bye.